Hey guys, Tom here from the Investing with Tom YouTube channel. Well, if it isn't your lucky day, this week you are going to get 2 videos on stocks that I'm watching through the month of May. These are also businesses that I've done plenty of research on, business models that I currently understand quite well, and I'm really confident that those companies are going to do well over the long term. They are probably businesses that I'm not going to be purchasing shares in this month, even that said, just because their prices are currently so high, and we'll get into that shortly. But nonetheless, let's run you through some businesses, 2 bonus companies that are on my stock watch list for the month of May. And just like I said in the first video, because some guy on YouTube's buying or selling a stock doesn't mean you should be doing the same. I'm not a financial advisor, and even if I was, I would be probably giving you that same advice. Look at the facts, do your own research, and come to your own decision on what you should be doing with your money. So nonetheless, that's my disclaimer, and let's get into the video. 2 bonus stocks for May. The first bonus stock on my watch list for May is a company called Monster Beverage. Monster. You guys are probably familiar with Monster Beverage through their beverages by the name Monster. So they produce a large range of energy drinks under the Monster brand and under several other brands that Monster has started and also acquired over time. So Monster is a really interesting company. In my mind, it's a very similar sort of type of investment to what Warren Buffett was looking at with Coca-Cola in the 70s and 80s when he was first buying into Coca-Cola. So it's a big time brand play. It doesn't quite have the history, of course, that something like Coca-Cola does, but it's a big brand play. They have grown market share over time. Energy drink as a sort of industry continues to grow over time as the world becomes more and more sort of addicted to caffeine, I suppose. So it's a big brand play, but one of the interesting things for May specifically that we want to keep an eye on is actually a lawsuit that's going on with Monster, which is really interesting. So Monster work quite closely with a company which you'll all be familiar with called Coca-Cola. And the reason they work with Coca-Cola is actually for distribution purposes. So Coca-Cola have massive distribution networks in place to actually get their own Coca-Cola beverages and the other brands that they own out into stores and out into the marketplace for consumers to actually purchase. It's a very large job, massive distribution networks. They've gotten very efficient at it over time, and it's now something that they actually have offered to as a service to other companies. And something that they're doing with Monster is actually providing that service. So Monster and Coca-Cola have an agreement whereby Coca-Cola will distribute all of the Monster products. So that work is basically contracted out to Coca-Cola. Monster Monster employs sort of factories to produce their beverages, and Coca-Cola's just distribution network kind of gets that out into the wide old world. So that's what's happening with the current sort of partnership. But the reason there's a lawsuit at the moment is Monster and Coca-Cola actually have an agreement whereby Coca-Cola are not meant to actually produce any energy drinks. Obviously, Coca-Cola is a huge brand, and they would compete directly with Monster and the associated Monster brands if they were to release an energy drink. So what Coca-Cola have done, you may or may not be familiar with this, is they've rolled out plans to produce an energy drink. So it's in violation, we think, of this lawsuit. I have heard rumors that the agreement actually says Coca-Cola cannot produce an energy drink unless it happens to fall under the direct Coca-Cola brand, which is very interesting. So that's the reason I'm keeping an eye on Monster, especially very closely through the month of May. Even if, regardless of what comes out of this lawsuit, I think I am still a fan of Monster over the long term because they do have such powerful brand power. There's already a lot of competition in the energy drink space, and Monster have proven themselves over time. Their market share has continued to go up. Their products, in my personal opinion, as a consumer of energy drinks, are much better than the other brands. So I'm still bullish on the company of Monster over the long term, regardless of the outcome here. So what is really interesting with that is if Coca-Cola and Monster do come kind of clash and they have issues with distribution, this may even cause some sort of short-term event whereby the shares go on sale and we can pick them up pretty cheaply. So it's not the case at the moment, but it's going to be one to keep an eye on. I'm currently not purchasing shares just because of the price, not because of the lawsuit or anything. I just think they're a little expensive at the moment, but I'll definitely be keeping an eye on them and watching what happens with this lawsuit. So that's stock number one, your first bonus stock for May. Let's get into the second one. The second bonus stock for the month is a company that I'm sure you're all familiar with, which is Apple. And for whatever reason, I always tend to use Apple as an example on videos when I'm running calculations and things. I don't know why it's Apple. It's just one that's always kind of glued in the front of my mind. So Apple is the second company I'm keeping an eye on. I like this company for a number of reasons. So I'll quickly run through those. Their products have huge brand power. So just like with Monster, when you have a powerful brand, you're able to charge a lot for your products, and you're able to charge a lot more for products that even might do quite a similar thing. Coca-Cola is a really powerful example of that. So there's massive amounts of cola beverages out in the market, but Coca-Cola can always charge more because people like Coca-Cola the best and they know what they're going to get. That's a little bit the case with Apple, although there are obviously different functions between different sort of smartphones. Everything has different features, all that sort of stuff. So not exactly the same type of brand moat as Coca-Cola, where you're selling a very similar product, but pretty similar. So products I really like, and they have obviously a powerful brand. So that is the first thing with Apple. In terms of the actual performance of the business, it's extremely stable. So the company has been continuing to grow over time, continuing to earn a higher return on equity and high return on invested capital over time, which I really, really like. They're definitely not growing as fast as they were in the past, but they have very efficient, sort of capital distribution, I guess we'd call it. So what I mean by that is they are extremely profitable. They make a lot of money. They're the biggest company in the world, I think, at the moment. It's jumped around a little bit based on market cap, but they were the first company to have $1 trillion market cap. They're the biggest company in the world, at least publicly traded, and they have very efficient capital distribution, like I said. So that means that they are very good at distributing capital to shareholders. They are doing massive amounts of share buybacks. If the business is growing over time, becoming more valuable over time, and there's also less shares outstanding over time, then your investment is going to do very well. That is currently what's happening with Apple. They pay a small dividend, but they're putting a lot of money into share buybacks and those types of things. So that is something that I really like. And the reason I bring up that the business is stable is it makes it very easy to value. So when you're valuing a business, one of the things that you're going to have to do is estimate a growth rate, and you're going to have to estimate what the cash flows are going to look like for that business out into the future. So that's always a bit of a judgment call. There's always room for error, and that's why we always sort of ask for a margin of safety or insist on a margin of safety when we invest in a company. But with a business like Apple, they're extremely stable. People are going to continue to buy Apple products over time. They have a services business that is continuing to grow over time. So things like Apple Music, people are continuing to subscribe to. It's growing extremely fast. I believe it's actually overtaken Spotify in terms of the subscriber numbers now. So it's a huge business in and of itself. And a lot of those more service-based businesses have very high margins. So when you sell a phone or a computer, which is sort of the typical way people think of Apple, you have to actually go and make a phone or computer, as obvious as it sounds. You have to spend money to build a physical object, and then you have to sell it. With a service-based business, such as Apple Music, you don't actually have to create anything. You're all of a sudden selling software and sort of online products. So you're not having to spend as much money to make the product and then sell it. And that means you can get some really, really high margins on those types of businesses. So to see that growing with something like Apple is phenomenal, and that's the reason why it's on my watch list. Again, it's very stable. I can put a nice value on this relatively simply. Understanding, of course, that value is not a specific formula that we can dial right in. There's a bit of guesswork. It's both an art and a science valuation. So that's what I'm looking at there, and that's the reason Apple's on my watch list. Again, a little bit steep at the moment in terms of price. They've come up a lot since I think it was the Christmas Eve low in the States last year. And not quite at a price where I'm willing to buy, unfortunately, but I'm camping out with my fingers crossed, and hopefully we'll get an opportunity to do that soon. So there you go. Those are the 2 bonus stocks that are currently on my watch list for May. I hope you enjoyed the video. If you did, I would very much appreciate it if you smash that like button, hit subscribe, and drop a comment down below to let me know your thoughts on the video. But that's all from me today. If you enjoyed the video, hit subscribe over here. Pretty sure it's on that side, but I forget every single time. And there's some other videos you can watch over that way, or whichever direction it is. Cheers.